Right, guys, as I said, accounting adjustments across change in profit sharing ratio, admission, retirement, and death are almost same. Wherever there would be variation, I will explain you that. So what these adjustments are, guys, let's understand them one by one. The first one is for newly valued goodwill. So this is one of the adjustments, guys. Whenever there is admission, change in PSR, retirement, or death, the partnership firm's goodwill is valued afresh, right? That is what I mean here when I say newly valued goodwill. Since a new partner is joining a partnership firm, he brings his capital and also his share in goodwill of the firm. Whatever share he brings in goodwill of the firm, that is credited to premium for goodwill account. And the capital brought in by him is credited to his capital account. And with these two amounts, we debit cash or bank account. Is it clear, guys, to you all?
Yes, sir.
Yes,
Yes,
sir.
sir.
In the next entry here, we debit premium for goodwill account. In case the new partner is not able to bring his entire share in goodwill of the firm in cash, means he brings only his partial share in goodwill of the firm. Then the remaining amount which he could not bring, we debit to his current account. Right? And then we credit sacrificing partners' capital accounts. In case he brings his entire share in goodwill, then we do not need to debit this account at all. Have you understood this, guys?
Yes, sir. Yes, sir.
Yes, sir.
So the amount of goodwill which he could not bring, for that we debit his current account. Whose current account? New partner's current account. And we credit sacrificing partners' capital accounts here, right? But apart from these two things on the debit side here in this entry, we can also have gaining partners capital accounts getting debited. There may be a case that apart from the new partner, some of the old partners are also gaining. So then we need to debit their capitals as well. Is it clear, guys?
Yes, sir.
And this is debited with goodwill multiplied with respective gain of gaining partners. And here we credit sacrificing partners' capitals with goodwill multiplied with respective sacrifice. In case a new partner is not able to bring any share in goodwill, then in the first entry, this account would not be created, nor it would be debited in the second entry, but the entire amount of his share in goodwill which he could not bring, for that we debit new partner's current account. If out of the old partners some are gaining, then their capital account would also be debited. And those who are sacrificing, obviously there would be some partners out of the old partners who sacrifice, so their capital accounts would be created. In case of change in PSR, retirement and death, there is only one entry for the goodwill valued afresh, that is gaining partners capital accounts debited to sacrificing partners capital accounts. And this entry we pass using the same concept, that is goodwill multiplied with respective gain and goodwill multiplied with respective sacrifice. Is it clear, guys, to you all?
Yes.
Yes. Yes, sir.
Taman, are you understanding it?
Yes, sir.
Sure.
Yes, sir.
In case of admission, we do this for newly valued goodwill, that is the goodwill which is valued on the date of admission or change in PSR or retirement or death, right? So for this goodwill, we have to do these adjustments in case of admission, change in PSR, retirement, or death. Right, guys? You should be very, very comfortable with the accounting adjustments, guys. Because when we start doing questions, you should be well acquainted and well convinced with these adjustments. The format of this journal entry and this journal entry is absolutely same. There is no difference. Though Apparently, the difference looks, but it is not so. Since the new partner is bringing his share in goodwill, that is why we do not need to debit his current account. Yeah, if he cannot bring, then only we debit his current account. We know that new partner is a gaining partner. So here also we are debiting gaining partners' capital accounts. But in case of admission, since it's a new partner coming in the business, not an existing partner as it is there in case of change, retirement, or death. And that is why he says that please do not decrease my capital by debiting it as we are doing it here. Instead, I am bringing some additional cash for the goodwill. I hope you're understanding, guys. So since he brings additional amount for goodwill, that is why we may not need to debit his capital or current account. We debit his capital or current account only when he cannot bring his entire share in goodwill of the firm. Am I clear? So these two lines are being debited for the gaining partner only. Which gaining partner? The one who has been admitted in the firm. And this line is for those gaining partners who are out of the old partners only. Is it clear, guys, to everyone?
Yes, sir.
Abhi, Rana, Akshita, have you understood this?
That yes, sir. Yes. Yes, sir.
Taman, are you asking something? Taman, I'm asking you, are
No,
you
sir. No, sir. No.
here we have created sacrificing partners' capitals with proportionate amount than goodwill of the firm. So in case they want to withdraw that goodwill partially or fully, for that we debit sacrificing partners' capital accounts and credit cash or bank account. The same thing we do here also. In case of change in PSR, retirement or death. So we pass this entry with the amount of goodwill withdrawn by sacrificing partners. Am I clear?
Yes, sir.
So
Yes,
guys,
sir.
just start noting it down from here. Make a table in case you cannot make this in one page. Take the two pages together and then make this kind of table. Guys, note down this also. Done with this also, guys, right? Everyone?
Yes, sir.
Yes.
Yes.
So, guys, what we have seen here, what is happening here, and what is happening here is basically the gaining partners are compensating to sacrificing partners. That is why gaining partners' capital accounts are being debited, means capital accounts balances are decreased, and sacrificing partners' capital accounts are created, means sacrificing partners' capital accounts are being increased. So, it's a compensation by gaining partners to sacrificing partners in all these cases. However, if gaining partners compensate to sacrificing partners outside the firm, right, by giving them cash or something, then that would not be recorded in books of the firm at all. That is called payment of goodwill privately. So if a question says that a gaining partner has compensated to the sacrificing partner outside the firm, then you should not record that transaction in books of the firm at all. Right? So you have to keep this in mind. Now we move on to the next adjustment, which is for revaluation of assets and liabilities. In all these cases, we have to do this adjustment as well. So for revaluation of assets and liabilities, there are total three journal entries. One is for revaluation loss, for which we debit revaluation account and credit assets account. Those assets, the value of which are decreasing. We also credit liabilities account, those assets, those liabilities which are increasing, including the unrecorded liability, because that also increases. And this denotes, these two credits denote total loss upon revaluation, right? The next entry for is for total profit upon revaluation, for which we debit assets account for increase in assets, we debit liabilities account for decrease in liabilities, if any. We also record unrecorded assets because that is also kind of increase. An asset was not there earlier in the books, it means it had zero value, and now we have found that asset. So such asset is called unrecorded asset. Its value is increasing from zero, and that is why that asset would also be debited here to revaluation account. And this denotes total profits. These two things denote total profits. So here we have total loss, here we have total profits. With the difference of the two, we pass journal entry if Trade side of revaluation account is more than the debit side, means if profits are more than the loss, then there is net profit which goes to old partners in case of admission of a partner. In their old profit sharing ratio, the amount of increase in it.
Okay, sir.
Am I clear?
Then if it's overvalued, it will be a revaluation to asset account.
Correct. It will come here.
Okay, sir.
Let's say this is the case. Machinery balance given to us in balance sheet as 1,20,000. And the question also says that machinery is undervalued by 25%. It means whatsoever was the actual value of machinery, it has been decreased from that amount by 25%. Right? We know that whenever something is undervalued or decreased by 25%, it means the value that is reflecting now is equal to 75% of the original value. It means this value, which is undervalued, is 75% of the original value. So the actual value of machinery is 1,25,000, sorry, 1,20,000, which is equivalent to 75%. So divide by 75. So what is the actual value? That is 100. So assume that 100 is the actual value of the machinery, and since it has been undervalued by 25%, it means now its value is 75%. So if 75 is equal to 120, how much 100 would be equal to? And that comes to 1,60,000. So this is the actual value, but from here it has been decreased by 25%. So if you calculate 25% of 1,60,000 Taman, it will come as 40,000. So 160 minus 40 is 120. So its actual value is 160, but in books it is reflecting at 1,20,000. So we need to increase it by 40,000. So here we will have 40,000. Machinery account debit with 40,000.
Sir, then the machinery is undervalued by 1 lakh. What will it be, sir?
Yeah, then
It's,
then here you will simply take 1 lakh. Right?
if
It
it
is
is,
undervalued by 1 lakh.
yes,
It
sir.
means its value in the
Okay,
books,
sir.
let's say reflecting 120, but actual value is 2,20,000. So from 220, it has been undervalued by 1 lakh, and now it is reflecting at 120. So you need to increase the value of machinery by 1 lakh. Then simply you will put the amount here, whatsoever is given to you in the question. But usually the
Okay,
questions
sir.
of undervaluation, overvaluation are not, they are not asked with the absolute value, but they are asked in terms of percentage, as I have given it here. And that confuses students. So I hope with this example you have understood
Okay,
this,
sir.
right, Taman? Yeah.
Yes, sir. Yes, sir.
Others also, I hope you have understood, guys, right? Ana, Abhi, Rakshita, Falak, and Taman.
Yes, sir.
Yes.
Yes, sir.
अबीर आप नहीं हो क्लास में यू आर नॉट इन द क्लास
नहीं सर, मैं हूँ। मैं थोड़ा समझ रहा था वो ये वाला सर इस मैं थोड़ा कंफ्यूज रहता हूँ
हाँ
इसलिए।
इसीलिए मैंने आपसे पूछा तो whenever I ask you at least say sir please give me some time I still need to check it do not be mum right
यस सर।
so have you understood this should I go ahead
सर वन लाइक बेसिक क्वेश्चन डाउट वाज लाइक व्हाई वुड टेक 75%, like 75 there, like
when something is undervalued by 25% it means now It is how much percentage of its original value? 75%. 100 minus 25, 75. Correct?
और सर अगर ओवर वैल्यूड होता तो अब
Then we would have taken here 125. 120 divided by 125 into 100.
तो ओरिजिनल वैल्यू आ जाता है कि अंडर
Right.
वैल्यूड वाला
नहीं नहीं,
वैल्यू।
ओरिजिनल वैल्यू आती देन। अगर आप 100 मल्टीप्लाई कर रहे हो तो ओरिजिनल वैल्यू ही आएगी। क्लियर?
अगर 100 ने मल्टीप्लाई करे तो देन अंडर वैल्यूड या ओवर वैल्यूड वाली वैल्यू आएगी।
नहीं, पर आप ऐसा क्यों करोगे? नहीं नहीं, तो भी नहीं आएगी। ऐसा क्यों करोगे? अगर आपको सीधे, इफ यू वांट टू नो the amount by which it is undervalued or overvalued, then you should here multiply this percentage, not 100. I did not do this purposefully so that I could explain you all these things in steps. If I directly take 25%, here we will get 40. And this 40 would have gone here. The same way, if it is overvalued by 125, you will take 125 here, and here you will take 25. And then you will get the amount by which the asset is overvalued. Clear?
यस सर।
Sir,
Yes, Taman. Taman, you are asking
sir,
something? Yeah.
sir, what would you do if it is overvalued by 25%, sir?
120 divided by 125, because you are saying that it is overvalued by 25%, right?
Yes, sir.
Yeah, it means now the value is equal to 100 plus 25 means 125. So if 125 is 1,20,000, how much 25 or how much 100 would be? What sure you want to calculate? You can do that. So let's say I'm taking 100 only. 100 is original value. So this comes to 9,60,000. Sorry, 96,000.
Okay, sir.
1,20,000 divided by 125 into 100, yeah, 96,000. It means its actual value is 96,000, but it has been presented in books as 1,20,000. So we need to decrease the value from 120 to 96, means we have to decrease it by 24,000. So that 24,000 would have come here.
Okay, sir.
Am I clear now?
So the 25 percentage will be added with the 100 and divided, sir.
Right, would be divided by 25%. 25 would be see, if it is case of overvalued, you will add this to 100%, and then whatever you get, you will divide this to the given value and multiply with this 100. So 100 will always come here.
Okay, sir.
This is how it would be. If it is undervalued by 25%, you will divide the given value by 75 and will multiply that with 100. With that, you will get the actual value. You will compare the actual value with the value at which it is being presented, and then you will find that okay, you need to increase the machinery by 40,000. That is 160 minus 120. And if it is overvalued, then you will divide the given value by 100 plus 25 means 125, and then multiply this with 100, and this is how you will get the original value. And then you will compare the original value with the book value. And here you will find you see that book value is 120, but the original value is 96,000. So you need to decrease the asset by 24,000. Clear? Come on now.
Yes, sir. Yes, sir. Yes.
So every time 100 will come for sure. If you multiply this with 100, you will get the original value, whether it is the case of overvaluation or undervaluation, right?
Yes, sir.
If the credit side of revaluation account is more than the debit side, it means there is net profit upon revaluation, for which we will debit revaluation account and will credit old partners' capital accounts in old profit sharing ratio. Means this profit, that is the difference of this and this amount, would be shown here, and that amount will go to old partners in their old profit sharing ratio. Here also we will have the same thing in case of change in PSR, retirement and death. The only difference is that what will be the net profit, that will go to all the partners. So here we will have two all partners capital accounts and old profit sharing ratio. And if debit side is more than the credit side, means the loss amount is more than the profit, then there is net loss upon revaluation, for which we will debit all partners capital accounts and will credit revaluation account with net loss upon revaluation. In case of change in PSR, retirement death, instead of old, we will have all partners capital accounts getting debited. Is it clear to everyone, guys? So this is how we will have these two and one of these, that is total three entries for revaluation of assets and liabilities. Am I clear, everyone?
Yes, sir.
Yes.
Now,
Yes.
whatsoever you want
Yes.
to note it down, guys, note this down, this much at least. And if you want to note down this also, you can do that.
Yes, sir.
Guys, please note this down fast, everyone. That's it for today. We will continue from here in our tomorrow's class. Tomorrow we will have class, guys. Please do not make any plan for tomorrow. Right? Thank